Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock with news the Fed has pulled the trigger on tapering. The US Federal Reserve said this morning that the US economy has made progress towards its employment and inflation goals, and that if progress continues broadly as expected, a reduction in the pace of asset purchase may soon be warranted. The Fed also signalled that interest rates may need to rise faster than initially expected, with 9 of 18 policymakers projecting borrowing costs to rise in their dot plot for 2022. Their signals for the move higher from there are even stronger. Meanwhile, the partisan standoff on the US debt ceiling continues. Congress achieved the easy part, getting the House to approve. The hard part looms, Senate approval. And Janet Yellen is frustrated, as are most former Treasury secretaries. If this continues, a credit rating downgrade is entirely possible for the US. It is not unprecedented. European consumer sentiment is holding on to its strong levels in September, far above their long-term averages. This has been the case for 3 months now, taking it back to pre-pandemic levels. And the Chinese central bank left its key interest rates unchanged again, but it has pushed $25 billion in liquidity into markets to underpin the Evergrande confidence crisis. There are reports that the Home Team is coming to the rescue of Evergrande with a negotiated coupon arrangement with bondholders. In the rough and tumble world of trade negotiations, it seems that Taiwan has formally applied to join the TPP. It is a move sure to anger China, which has made its own quixotic application recently. And the pandemic pressures and uncertainties are driving Australians to save. According to official data, households had $162 billion in savings at June 2021, double the previous peak of $80.5 billion saved by households in 2015. And separate estimates show that the surge is only just starting, rising to $230 billion by the end of this year. A level like that is expected to prop up consumer spending and bolster their economy once it emerges fully from lockdowns. And the US Treasury 10-year yield opens today at just on 1.31% and 2 basis points lower from this time yesterday. And the price of gold will start today little changed at $1,776 an ounce. But oil prices have bounced higher overnight compared to yesterday's levels and are up $1.50 to just under $72 a barrel in the US, while the international Brent price is now on $75 a barrel. And the Kiwi dollar opens today a little firmer at 70.2 US cents. And against the Australian dollar, we're a little changed at just under 96.8 Australian cents. Against the euro, we're firm at 59.9 euro cents. That means our trade-weighted index starts today at 73.6 and moving back towards the top of the 72 to 74 range of the past 10 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.